Hello, good morning. Welcome to another exciting episode of the challenge of taking 200 funded capital to 2 million. This is a very huge challenge, and I am happy for the support and the comments and the feedback I've received so far. For today, I'm just going to quickly show us what we've been able to do so far from yesterday's trade. The trade we took yesterday on GBP USD has given us reasonable results. So we are up profit of 2,466 at the moment. That's our profit for yesterday, which is a good one, to be honest. So we quickly go through to what we're going to be doing today. As a rule of thumb, we go through the trading plan again. So I've made it into a PowerPoint to be easier for people to follow. Some of the feedback I received yesterday was that it's difficult to read from the Microsoft Word where I typed it yesterday. So I've tried to make it into this PowerPoint. So I'll quickly go through that again with us, which is very important. So our entry confluence, again, a retest of 4-hour moving average with an accumulation on the 15 minutes time frame. This is my best entry confluences, and this reason why it is the best is because it is not as complicated as the other two. I showed us an example of that yesterday. If you want to see the example, you can check through my previous video, the last video I did yesterday. Talked about that, and again we talk about support and resistance with an accumulation on 1 hour time frame and a reasonable level for stop loss. Preferably take your position on break and retest of the 15 minutes time frame moving average. I should have added that. So what this means is that when the price gets to a support or a resistance, you're looking forward to taking a trade, but you have to be very careful. You have to understand that you have a reasonable stop loss, not more than 20 or at most 25, 30. When you're having where your stop loss supposed to be is more than that, then it might be a very bad trade, except if you're holding for a very long time. But if you're a day trader, 15 to 30 stop loss should be okay, except when there is huge volatility in the markets anyway. The other thing is retest of daily moving average with accumulation on the 15 minutes time frame with a break and retest of the 15 minutes time frame. Remember, this is the reason why we took yesterday trade. There was a retest of daily moving average, and we were expecting that there's going to be a 4, and that was what happened. We had a 4 and we were able to make 2,000 of that. So then the exit criteria again: set a take profit, set a stop loss. So you can exit on your take profit. If the price shoots up and hit your take profit, get out. Or if you don't set a take profit but you have a target in mind that, okay, when I make 200 from this trade, I'm getting out, get out on 200 because it's my reverse. A very good example: yesterday, after taking the first trade, I took another trade on GPP card, and was it GPP card, I think? Yeah. And the trade was going very well. It was going in my favor. I accumulated a profit of about $1,000, and I was like, oh, it's still going to go further than that. Unfortunately, it reversed back. I have to close the trade in very tiny profit, I think $85. So once you set a take profit, or you set a profit in your heart, just take it. Then a failure to break a support or resistance level after 1 hour. Once you see price failing to break a support level after an hour, please exit. And I will show you an example of this, and this is the reason why we exited the trade yesterday, because the price is failing to break a kind of, I won't say a support, but we have our moving 4-hour moving average there. This is the price yesterday. We took the trade around here. Let's go on to 15 minutes time frame. 15 minutes time frame. This was yesterday. So this is where we took our trade and it fell up to this point, and we saw the accumulation here. 1, 2, 3, 4. This is an hour, not necessarily an hour, just when you feel like look at this one as a 1, 2, 3, 4, 5, about an hour as well. Just get out of the trade if it's failing to break, or when you see a kind of doji candle, once you begin to trade and relate to trade more, you begin to get to know one of the reason why you should exit. Like when you see a kind of candle like this, you should know that you should exit that trade. So we exited here because it's failed to break this, and we have the 4-hour moving average at that point. That was why we exit. So let's quickly rush through it. Then on higher time frame moving average retest, like the 4-hour moving average retest that we had yesterday, exit. If it's go ahead to touch daily time frame, let's say for example here, let's go to daily time frame. Let's say here you were buying because you believe that the market will go up. Once it gets to this point, exit, because you can see, like here you see it push up a little bit above it, but eventually reverse down. But the best thing is just exit. Like you can see here, a push up to this point and the thing reverse down. So once it touched a higher time frame moving average, the 4-hour, the daily, the weekly or the monthly moving average, just exit. At the moment we are around the monthly moving average, but that's a long time thing. We don't really have much to do with that. So that is what that means. So let's go to the last slide, our trading management. If position taken on a clear trend, like we have a buy trend that is very clear and precise, the fundamental is in line, the moving average are all below, say a buy trend, now you can add position as the price moves in your favor. So you can, and the position had, say for example I entered 10 standard lots, I should only add 5 standard lot upward, that I shouldn't add anything more than that. I shouldn't add 10, because when it retraces, it's going to accumulate loss. Then never add position to a losing trade, no matter the candlestick pattern or the news or the emotion or what. Don't add to a losing trade. Set your stop loss and stick to it. This is very important, and we are all doing this together. Calculate a determined loss percentage on your accounts. We did that yesterday, and for the trade we take today, we're going to do that again. So the trade I'm looking to take, because here on the GBP USD you can see I don't have moving average here. I don't have any supports around this level. I don't have any resistance around this level. So at the moment, GBP USD is not a good option for me to take, except maybe if the price come back here to touch this and goes up, or come back to around this level, then I can consider taking GBP USD. But at the moment, so I have to leave GBP USD, and this is the reason why I trade at least 4 pair. Now going to GBP card, this is the trade I am in this morning, and the reason was that we had a push down up onto these points, right? This is the 4-hour moving average, and if you look onto your 15 minutes time frame, you can see there is a huge accumulation here, even though it looked like a trend downward, but it's reasonable to take a buy. And remember, the reason why I'm taking this buy is not only because of the analysis, but again, the CPI for the Canadian dollar that came out was negative, badly negative, and that was why you see this surge of consumer price index. So having said that, we're looking for a buy now. We're going to be using this example again to calculate our position size, which was the last thing I talked about in the trade management. You see here we have 20 from here to here is 20 pips. So we go on to our position size calculator, and our current account balance, like I showed you earlier, we've made about 2,000. So we change the balance there to 202, and we're risking 1% again. Remember, I said yesterday that until we're able to make 2% before we can increase our risk. So 202, 1% and 20 pips stop loss. I should have changed this to GBP card, but if I put GBP card, it will ask me for ask price, and I'm not ready to go through the hassle of looking for what the ask price is. So I'll just leave it at GBP USD and calculate that, and it came back to be 10 lot size. And on this current position I'm in, I've put 10 lot size. Maybe I should just show you my position for today, so that it will not be as if I'm just talking. This is my position. So this is my position, right? And I'm looking to take profits here. Remember, as part of our routine that we talked about yesterday, the housekeeping, we had to look for what the market is doing today, and that is by checking our Forex Factory to see if there is any news. I've checked this before just to carry us along and to remind us. So this morning we are having French PMI, a number of news coming on the Eurozone, the French PMI, the German PMI, the Flash PMI for the Euro, and at 9:30 GBP is having its own PMI as well. So there are quite a number of news here, plus CPI on the Eurozone is coming today. So I guess this is the reason why you see the surge up that you're seeing on GBP here. You can see it's going bullish, ever bullish. So for me, I don't like taking this kind of trade, even though it looked promising, because I think I saw this trade around here. But the problem is where I'm going to put my stop loss, even though I believe that from it touching the 4-hour moving average, it should go up. But once it moves far above the level I should have been able to enter, I just leave it and let it go. For example, let's say this one now. Look at where our stop loss will be. That's 50. That's too much. So what are we looking to get? You see? So this is the reason why I didn't take this trade. But again, you see DSY surging down. This is daily time frame. On 4-hour time frame, it has break this. So thinking DSY might push up onto this key level again, but we'll see. Once the news is released for the PMI, that will give us an idea of what will happen today. So that's it, guys. I wish you all the best. So it is me again, Ojo Peter, and I'll see you in the next video. Thank you.